Hello and welcome everybody to the live commodity market analysis with the Gold and Silver Club for you on the 18th of August 2016, presented by myself, Phil Carr. So during today's session, we will be covering live market analysis. We will go through a watch list of trading opportunities. We will cover an overview of the commodity markets, our performance of our top trades over the last week, and of course we'll be answering any questions you may have during the session. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the world's #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, and as internationally respected experts, our analysis and our opinions on the metals, the energies, and the agricultural markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, Global Banking and Finance Review, the Wall Street Journal, and of course it's a pleasure to be here on FX Street as well. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial monthly income through commodities using our signature trading strategies. So for more information on the Gold and Silver Club and our expertise, please visit our website, which is at www.thegoldandsilverclub.com. Okay, so we will get straight into it. And first of all, we'll have a look at gold, and especially off the back of the minutes from the FOMC yesterday. So we saw gold rise overnight and off the back of the minutes from the FOMC statement, as essentially the Fed minutes called a rate hike expectation. So they called off their view for a potential increase in rates as soon as September. It's supported initially, we saw a breakdown of the US dollar, and it did support also the prices of gold in particular, which we will have a look at very shortly. Gold rose for a fourth straight session on Thursday, supported by the weaker dollar. After the minutes from the US Federal Reserve's July meeting showed several members expressed caution over hiking interest rates soon. The minutes shows that members from the Fed were generally upbeat about the US economy and labor markets, but several members said any slowdown in future hiring would argue against a near-term hike. And just to show you quickly what the US dollar index did as a result, you can see the US dollar index has broken down just this morning again. It's broken down to 7-week lows off the back of that statement, and we've seen inflows again into gold, which we'll take a look at very shortly. So this was against the market expectations. They weren't expecting for this, and we've seen that quite significantly have an impact on the US dollar to the downside. Of course, this week we've also seen some big sparks in the oil market. So oil increased over last week 14%, and in fact over the entire month of August we've now seen oil up 20%. So we've seen big inflows into oil. We mentioned this last week, and particularly the week before that, where we had identified $40 per barrel as a key level which you could look to go in to enter position. We came to the 50% Fibonacci level, also hitting the 200-day moving average at that point, and our research also supported some inflows at that level, as well as given the fact that we saw oil jump on comments that Saudi Arabia was ready to help stabilize the market and oil producers set to discuss an output freeze in September. That has been the catalyst here over the last 2 weeks, and we've seen oil now steady near 6-week highs on talks of an output freeze. And with that, we've seen, in fact, Brent crude oil shoot all the way towards $50 per barrel over this week. So we've seen an incredible turnaround for the oil market, which I'll have a look at with you very shortly. We've also seen additional increases from investors, from hedge funds. In particular, investors continue increasing the bullish bets in oil. Combined WTI and Brent net long positions jumped to 389,096 contracts last week, whilst open interest soared to its highest level in 10 years. And that is since we hit the 12-year lows of $26 a barrel earlier on this year. Over February, crude oil prices have surged over 75% so far. So that has been an incredible turnaround. And as we've been mentioning during our weekly analysis, the month of August can be a very lucrative month for commodities. Certainly for the oil market, we've seen tremendous inflows. So with that said, we'll go over to the technicals, guys. I've had a few questions already prior to today's session with respect to our view on gold in particular here, because we are at a very interesting point as we head into the US session this afternoon. So we've got, in terms of announcements, we have the initial jobless claims coming up in half an hour at 1:30 London time, the Philadelphia Manufacturing Index as well at 1:30, both of which are likely to cause volatility on the US dollar and also on the precious metals. And we've got an FOMC member is speaking at 3 o'clock London time, and FOMC member Williams is speaking at 9 o'clock London time. So we've got 4 announcements today which are likely to cause volatility. The most important in the short term being the initial jobless claims and the Philadelphia Manufacturing Index, which are coming up in just over 23 minutes. First chart we'll have a look at here is going to be the US dollar index. Why is this market important? Essentially, as I'm sure a lot of you are aware, especially if you trade commodities, that if you see weakness in the US dollar, it does help provide support for commodities, especially gold, silver, sugar, coffee, cocoa, and so forth. If you see weakness in the US dollar, we often see any commodities, which is the majority of them priced in dollars, would benefit to the upside. And if we see a move to the upside on the US dollar, if we see strength, that would provide weakness for commodities. So in terms of gold right now, if the US dollar continues its fall, it's already broken through yesterday's lows, especially following on from the minutes of the FOMC yesterday. It has clean air here to break down to around the 94 level. We've also broken down to 7-week lows now on the US dollar index. It does have more room to go to the downside until it comes into an oversold condition. So I am looking at the potential for the news announcements over the course of today to provide more weakness, ideally here, for the US dollar to give some of the commodities the breakout that they need in order to really get going here. Gold is a classic example. Gold had, in fact, I'll take it down onto just a slightly tighter time frame for you here at the moment. We'll have a look. Also, let's just bring that down into, yeah, this is the spike that we essentially got on the minutes. This is just a raw chart at the moment, so not too many indicators. You can see right now, this is the spike that we got over the minutes of the FOMC statement yesterday, just after 7 o'clock London time. We came down to 1,335 US dollars before getting bid right back up. We then moved back towards resistance, and you can see here really gold is significantly range bound between support at 1,335 down to 1,330, and it's got overhead resistance at 1,356 to 1,358. It's still staying within that very tight range. Now, there was a lot of speculation from various analysts, if you look all over the different news channels yesterday, that gold and silver were on the verge of a breakdown. However, they didn't do this. We saw them get supported over the course of the minutes from the FOMC, which caused the US dollar to break down. Gold has been trading near its 2016 high. So if it was to break above 1,375 US dollars, that would be breaching the 2016 highs. It's still got work to do at the moment. Now, essentially, the key levels that you want to have a look at if you do trade gold would be a breakout above the 1360 zone. That would lend to good support here for gold. Now, do note, if we have a look at the daily chart, we got a close yesterday above the previous. It's actually the strongest close that we've had since non-farm payrolls. Although we've got a few rejection candles here, it is the best close that gold has had in over a week and a half since non-farm payrolls at the start of the month. So gold closed at 1,348 US dollars and 50 cents last night, which was above all the previous closes that we've had following on from the non-farm payroll. So that does bode well for gold. At the moment, you can see it's developing a doji on the daily chart, which marks indecision in the market. It broke out overnight during the Asia Pacific session. It got sold back again during the European and the UK session. Could have been down to some degree of profit taking. It has broken out of its pennant. It has broken above the previous day's high here. We're watching to see whether gold can follow through. So it's not confirmed yet, but what I do find interesting is that the pullback yesterday, if you traded it on the tighter timeframes, very quickly we saw a surge off 1,335. We saw some big orders come in at that zone. We've got an underlying trend channel here on gold, which is providing a lot of support at 1,330 to 1,335. If gold can pick up enough momentum here and break above its weekly highs at 1,360, then we've got clean air for about another 70-point move up to the previous highs from July here, which would take us above 1,367. You break those levels, and then you're back at the highs that we've essentially ran into following on from the week after Brexit, which is at 1,375. So that's what we're watching for. Now, typically, if you go back historically, after the minutes of the FOMC statement, this is often where you can see some follow through. So if you have a look at last year, in fact, let me just bring you back to that. The minutes of the FOMC statement last year were exactly here. So this was the day of the minutes of the FOMC statement in August 2015. We formed a doji on the chart, a rejection candle, and then this was the Thursday, this was the Friday, this was the Monday, and then we got a correction the following week. So that was a 500-point move. A 500-point move from here for gold would take gold up to the 1400s if it was to deliver a similar move to the upside to what we saw last year. Now, obviously, right now, gold is in decision mode. We're battling it out between the bulls and the bears. Technical advantage is on the side of the bulls right now. We're above a lot of moving averages. We're above a trend channel. Gold is up 27% so far in 2016. It's transitioned into a bull market. Technical advantage is on the side of the bulls, but it needs to do a little bit more work here. And what I'd like to see ultimately is if the US dollar does break down, comes down to its it's got a clean air here really to get down to 94 and possibly even below that, the 93.50 to 93 zone. If it does that, that will give a short-term lift to the precious metals. Now, Janet Yellen is due to be speaking next Friday at Jackson Hole, and we often see volatility both in the lead up to that, on the actual announcement itself. So you just need to watch out here for gold. I think moves to the upside, we could be due a nice breakout here from this pennant. We've got a box formation. We've been consolidating for over a couple of weeks here on gold. Once we can break out of this formation, it could provide a significant move, but then we could see more volatility as we come into next week, Thursday and Friday in particular, on the back of the Jackson Hole the meeting. So with that, we are expecting a short-term move here, which could last in the region of 2 to 3 days, depending on which way we break out. Preference for a breakout to the upside, given the overall trend of the market, the fact that the US dollar is currently breaking down. What we need to watch out for next week is if we do see the US dollar break down, for example, today and maybe even tomorrow, is then it will come into a major underlying support, which is at the 93.50 zone. And from this region, we could then see the US dollar get bid back up. It will be in an oversold condition. And if it does then spring back up again, that will obviously provide weakness for the metals going into potentially September. They might be overdue a correction by that point. And therefore, that's what we want to just bear in mind in the short term here for over the next week, certainly as we come into Thursday and Friday, potentially more weakness on the US dollar. And then next week, we might see a move back towards a retracement back towards the key levels here, potentially a 95 zone, which we'll be looking out for. We can also just draw on some trend channels on the US dollar where it could potentially come down a little bit lower over the course of the US session today. So watching gold very carefully here. I do see a good trading opportunity if it continues to break out to the upside. I'm sure a lot of you are aware we've got longer term buy positions on gold here. We would benefit definitely from a breakout to the upside. We've got a nice pennant formation, nice consolidation zone, just need a bit more follow through. It is a little bit concerning that gold cannot get above the 1358 zone over the last week, but then again, we could see today that level breach. So we'll be watching it very carefully indeed. Now, moving over to some of the opportunities that we've got in other markets right now. I just want to put this on your radar because we've had a few questions about this as well. We had the USDA reports last Friday, which caused a breakdown in price for some of the grains. In particular, corn actually broke down to a major underlying level of support here, which you can see is the 10-year lows on corn around the 300 zone, We formed a rejection candle on the monthly, on the weekly as well, held on to a major underlying support zone with the weekly close. And in fact, on the daily, we've started to build a nice rejection candle. We're in the midst of a V-shaped reversal pattern, which is what I'm looking for more follow through here. Could look for at least a retracement up to 38.2 Fibonacci level, possibly 50%. So corn I would have on your radar right now. We quite like this for this risk to reward at the moment. It does offer good upside potential. So if you do trade the grains here, I would suggest having a look at corn. You can see, just to give you an idea, some of the risk to reward that is we're looking at here on this trade. You've got quite a lot of upside in terms of targets here. So keep an eye on corn if you do trade the grains. Same situation really with wheat. Wheat, following on from the USDA reports last Friday, initially broke down, then we capitulated into the close on Friday. So far this week, it's been grinding higher. You've also got a neckline here to break above, which is the 430 zone, break above that level, and we could really start to ramp up here for both wheat and corn, as seasonality wise, they typically tend to bottom out over the months of July and August. And then we can start to build up momentum as we move into the final quarter of the year. So I just put those on your radar for now. In terms of oil at the moment, well, certainly light sweet crude oil, it's had an incredible rally over the month of August, to 20% move since it hit the key level of support that we identified at $40 per barrel. For those of you who've been on these weekly webinars on a regular basis, you'll be aware that we've been looking at the highs here of $52 per barrel as really the high for oil. When we discussed this about 2.5 months ago, that a typical correction on oil can last up to 2.5 months, is normally in the region of 50%, or potentially we could move down to 61.8%. We hit the 50% level spot on for light sweet crude oil. The duration of this was 2 months and just over 1 week, which is a typical in terms of your first leg down after your first. It's typical in terms of correction on oil after your first leg up in a bull market. That is the sort of duration you look for, up to about 2.5 months. We hit that spot on over the beginning of August, and since then we've had a really strong rally back. Now we are looking at more upside over the next following months here for oil. Ultimately, we're looking for $52 per barrel to be taken out here for light sweet crude oil for the next leg higher. In the short term, oil has become overbought quite quickly. It's increased last week over 14%, 20% over August. It is getting into an overbought condition, but right now we're looking at pullbacks as buying opportunities. So I wouldn't get in if you don't already have a position on oil. I wouldn't get in at this point in time, but I would wait for the next corrected pullback. If we do get it, might be that it doesn't pull back, but if it does pull back, I would certainly look at entries. Let me just show you where we're looking at in terms of our zones right now. Yeah, around 50 would be a good level. 50% Fibonacci, which would take it down to about the 44 zone, 43 to 44. So if you've got about another $3 pullback on oil, if we see this back and forth motion, we could then get in on the next pullback. So that's what we're looking at the moment for oil. But in terms of a fresh position, I would just wait unless you already have a position on this market. Also, another market which I would also keep on your radar right now is sugar. Sugar also tends to be vulnerable to the US dollar. We had a strong move earlier on this week. We got 3 days of consecutive gains here. We found support a number of key moving averages, also a very key level here, which is just around the 1950 zone. I'm looking for more upside over the coming weeks here for sugar. It has had a corrective pullback over the months of July and August, and it's now consolidated enough to get going for the next leg higher. Ultimately, we're targeting between 22 to 23 zone up above here. So I do like sugar at this point for more upside. So I would definitely also have that on your radar as well. We do like sugar for more upside at this point in time. Okay, fantastic. So we do have we've got about 10 minutes until the news items come out. So we've got initial jobless claims and the Philadelphia Manufacturing Index. You can see right now the US dollar sort of just finding support at the moment around the 94.30 level. This will be interesting today to see if it tanks or whether it does find support at this zone. It has potential to break down lower. Of course, if it does do that, that will provide support to the metals. So do watch that closely indeed. We will be taking additional trade setups as they develop. We've entered into a couple of new positions this week as well, which are starting to move quite well. So if you would, always get questions on this, but if you would like to get access to the exact trades that we take at the Gold and Silver Club, the levels, get alerted to those setups, the risk to reward, get regular analysis on those, of course, there is an opportunity for you to get access to that, which I will go through with you very shortly. So let me just talk you through some of the top trades that we've had over the past week. These have also been setups that we have identified with you on our previous sessions as well. So here's our trading performance update over the month of August. So we identified a nice opportunity. Last week, actually, we formed about a week and a half ago, we formed a bullish engulfing candle with Brent crude oil. Also, after this is a point where we exited out of our longer term sell short position, and then we flipped around, went long, and this provided us with a 550 point gain there for a swing trade, hitting our profit target at a key overhead level of resistance. Light sweet crude oil, as we identified that 50% Fibonacci level where we reached over about a week and a half ago, that provided a perfect entry to get in with a pretty tight risk to reward. Again, for a swing trade, we've come out of that position for 475 points. Now we're waiting for our next entries on oil, but both of those have turned into really nice, profitable trades to take advantage of a typical August seasonality with oil. Now, moving over to our trades that we provide for our members of the Gold and Silver Club, if you would like access to highly profitable live trading ideas shared with you, ready to implement so you get instant results, there is an opportunity for you to get access to that. Very simply, all you need to do is go to www.jointhegoldandsilverclub.com, okay, to get exclusive access to our private members live trading room. Once you've completed the application form, we will get in touch with you ASAP. What does it include? So what do you get by being a member of the Gold and Silver Club? Well, essentially you get access to the following. So you get live trading room webinars where you get exclusive access to our live trading rooms. You can watch the Gold and Silver Club expert traders analyze the commodity markets right in front of you, picking out highly profitable trade setups, sharing exact entry, exit points, profit, stop loss targets that we are looking at, as well as walk you through live trade ideas ready to implement. You get notifications via email and SMS so you don't miss any profitable trades. All of those include the details of where we are entering, exiting, placing our stop loss. All of the trade setups are sent out in advance notice to ensure you have plenty of time to get into every position. And also you get access to all of our research, so our commodity research and market insights. You get exclusive access to our proprietary trading research and market insights to help you boost your win rate and ensure you're on the right side of the trades. Our trading research is really guaranteed to give you a much stronger edge in the market and fast track your results. So again, what do you get as being a member of the Gold and Silver Club? The private members live trading room includes exclusive weekly live trading room webinars throughout the week. You get live trade setups ready to implement, real-time trade notifications by email and SMS. Exact details of where to enter, exit, place a stop loss is shared with you. You get the weekly trading plan with a watch list of our trades for the week ahead, live trade support, and of course institutional level trading research and commodity insights to give you the ultimate edge in the markets. So again, to get exclusive access to that, all you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and of course we will get in touch with you ASAP. Okay, fantastic. So with that, so a couple of comments just with regard to what we've got coming up today. So again, if you want to just make a note down of these, I'm sure most of you are aware of this already, but yeah, literally in about 6 minutes time, we have the initial jobless claims and then the Philadelphia Manufacturing Index. We've got 2 FOMC members speaking today, especially off the back of the minutes on the FOMC yesterday. That could be quite important. We've got Dudley speaking at 3:05 London time and Williams speaking at 9 o'clock London time. As of right now, what can we see in the gold market? Well, I would definitely suggest you want to have your eyes firmly on the gold market. Again, if we break, we're at 1350 right now. Gold's actually ramping up ahead of that in 5 minutes. US dollar index, if it continues to break down, there's clean air until we get down to the 94 level. So have this on the radar, guys. If gold breaks through 1360, it is game on. You want to be right in front of your screens, especially if you trade gold. If you don't know how to trade gold, of course, I know we do. Sometimes we get the comments that we do make it look easy the way we trade, but of course, it's not always as simple as that. You need to know where to position yourself with these trades, where you need to enter, exit, stop loss, take profit, targets, how to manage the trade. Of course, you get access to all of that at the Gold and Silver Club. So again, if that is something that you would like to get access to, it's www.jointhegoldandsilverclub.com. Okay, great stuff, guys. So with that, I wish you good trading. Have a fantastic end to your week. We shall speak to you real soon. And of course, as always, I thoroughly look forward to welcoming those of you who will be making an application and joining us at the Gold and Silver Club. Fantastic. Take care, guys. Speak soon. Cheers. Bye-bye.